Welcome back to Dirty Money and Credit Suisse. Their shares soared yesterday and then kind of slumped again after it was revealed or news broke that the Swiss central bank was going to bail them out with a new loan facility for, I think it was 50 billion euros, which is 54 billion, not euros, excuse me, Swiss francs, which is 54 billion US dollars. And this kind of triggers that or kind of indicates, there we go, Chris, shares soar after the bank was bailed out, kind of indicates that the financial crisis that started with Silicon Valley Bank is now going global.
So, was it really systemic or idiosyncratic? I mean, we look at Signature Bank right now, and we look at other places like First Republic Bank. We mentioned it last week, right?
Yeah.
And last week I said, when it comes to community, there is no community in the tech banking world. There is no community in the tech world, but there is community in traditional banking, right? So in traditional banking, you have community coming to bail out First Republic Bank. JP Morgan said, we'll give you 2.5 billion in deposits. Bank of America threw in $5 billion. So they've got a total of $30 billion deposits from banks to really make them whole right now for First Republic Bank. If they didn't get that, I'm almost sure we'd be hearing about another bank collapsing in America right now. But
Also, the funny thing is that I was hearing as well is that, like you said, they don't really care about the bank, but they care about the money, like the traditional banking. So with SVB, they're letting the bank, go bankrupt, but they're insuring the deposits for the people who had money in the bank. They don't really care about the bank itself, the government. But let's go back to the Credit Suisse story, and we give a little bit of a background for the viewer first, and then I know you've got some thoughts on it, Mike, that you want to share with us as well. So basically what happened with Credit Suisse was that this bank was already losing a lot of money. And Dom, there's an article you can pull up from CNBC. Credit Suisse, they'd already lost something like 7.3 billion francs last year, which is equivalent to 7.8 billion US dollars. So in 2022, they were already a massively, loss-making bank, which is kind of crazy, right? And so that is what triggered the Saudis, who own over 9% of the bank. Okay, they're actually the biggest shareholder. And amongst Credit Suisse's big shareholders, notable shareholders, you'll see some very familiar names like BlackRock, and a few others. But the biggest shareholder is actually the Saudi National Bank, which is heavily owned by the Saudi government. And they own over 9%. Now, they didn't want to keep pumping money and buying more shares. They didn't want their ownership to go over 10%. We've actually got a clip that we can play of the chairman of the Saudi National Bank talking about that. So, yeah, Dom, if you could pull that up, that would be great.
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
Yeah, so they don't want to go above 10% because of regulation. It'll trigger a load of new regulations. But the fact that they publicly said this, it kind of speaks that maybe there was some agenda going on here, because you don't have to publicly come out and say that, because they probably would know that it would trigger a selling of the stock. And of course, they own the stock, so it's in their interest to keep the stock as high as possible to preserve their wealth as well, right? So what is the agenda here? Why did they publicly come out and say that?
Well, I mean, if you look at it fundamentally, he says their own regulatory banks, their regulations in Saudi Arabia. I really am curious what regulations that he's talking about there. Now, the European regulations and the Swiss regulations, they're going to be similar to ours, especially as you get to that 10% threshold where you become a majority in the banking system. Anything over 10%, you're now recognized that way. And what kind of regulations do they have to be scrutinized for? Are they now looked at where their investment capital comes from into that stocks, into those banks? And that's my question is if you really start diving back into it, the number one bilateral trade partner with Saudi Arabia is none other than the Chinese Communist Party, right? So you have the Chinese Communist Party as their number one. I think it's $87 billion a year that they trade goods in. That's their trade agreements right now. And then you have Xi Jinping on December 9th, 2022, saying he's going to do a $50 billion investment into Saudi Arabia. And it goes, well, in the European markets, they're going to want to know exactly where this money's coming from, why it's going there, and how much money they're bringing up. And I'm wondering if they're trying to hide money. I mean, the CCP is famous for cooking books and hiding money and putting it in places that, no one can find it. And if they do find it, oh, it was there all along, or we got it from a mine in Africa, or, who really knows where it comes from when it comes to the Chinese Communist Party. But I think fundamentally, it's really interesting that they don't want to have more than 10% because they don't want to be under this regulatory scrutiny. And it's like, so what's the point in having the regulations? Do they need to change the regulations to 5%? And so if they're afraid of the 10%, they're at the threshold. They're literally 9.8% ownership of Swiss Bank. And I think the reason they came out and said it is because everybody else was saying it about them anyway. So they're just going to follow suit. They don't want to be looked at one way or another. They're just going to accept it and say, yeah, well, this is why we don't want to do it. I think banks are very, very outspoken about their positions without having repercussions because they know that they just have capital to do whatever they need to do to be successful. And so I'm just ultimately curious what's going to happen with that whole thing with Credit Suisse. Is they had a lot of problems on the back end. Same thing with SVB. SVB is a bank that held 51% in Chinese tech startup money. So 51% of their depositors were from Chinese tech startups. Well, where does a Chinese tech startup get their money from? It's a really interesting question.
Yeah, it does. I mean, some of them from the CCP, I guess, but then also, I guess, other, large companies in China. But it's really hard to separate state and, private in China because every large company has a CCP secretary, Chinese Communist Party secretary attached to the board anyway. So they sort of toe the line of the agenda of the government anyway. So it's pretty interesting. And also, the people who had money in Credit Suisse would have been no other than Europe's elite. That bank is used. I mean, it's a Swiss bank. It's used by a lot of rich people in Europe. So to topple that bank is really kind of an attack on the wealth of Europe's elite as well, which is quite interesting.
Right. So it's interesting that both of these links to both of these bank issues. And I haven't looked into Signature Bank. I haven't really spent the time to figure out if there's anything there. But I would suspect there might be or wherever their holdings were. But if you look at it now, it's like, all right, 37% of Saudi National Bank is ran by is an investment fund directly from the citizens of Saudi Arabia, right? 37% is owned by Saudi Arabia National, the country itself. And then you have SVB having 51%, and then 37% of this money, it's really sticky. It starts to get really convoluted on where the money's coming from and who's pulling the money out. So if the depositors are pulling out the money, and that's why they had to sell the treasuries at SVB, well, who are those depositors? 51% of them were Chinese tech startups. So now if you go over to Credit Suisse and $50 billion is guaranteed to the Saudi Arabian country, along with $87 billion in trade partner with the CCP. So now you look at it and go, are they trying to start something here on the financial end? Are they pushing this envelope forward? And I want to look into Signature myself, and maybe next week I can have a little bit more on that. But I think
it seems like it's sort of unconventional warfare, isn't it?
Yeah, right. Fundamentally, is that what we're experiencing is like the war that doesn't exist with guns. Because the biggest thing is to bankrupt your country. Because if your country's bankrupt, you're not going to fight. You can't fight. And no one's trying to fight in the sense of being outspoken about it. It's something that is subvert. It's a very subvert thing, and I really see the links are all there. But and then again, it's dots. There's no concrete writing except for the depositors in SVB. It's clear as day. So
I want to move on to the next section in a second, but there's just one funny thing that when I was researching this, I noticed that the chairman, everyone was saying, oh, is Credit Suisse going to be the next Lehman Brothers? The chairman of the board at Credit Suisse is actually called Axel P. Lehman, which is it's quite amusing to me.
Ladies and gentlemen,
is this an
you
omen?
have been watching Dirty
That's what I was
Money.
thinking. I was like,
Please
wow,
subscribe to the channel if you're new. We'll
it's
see
kind
you
of
in the
a
next video.
coincidence. Dom, you can I put it in the chat. You can pull up a photo of him and his name and stuff, just so people see that this is real, because people mess with stuff like this on the internet all the time. But yeah, the chairman of the board of Credit Suisse, his last name is Lehman, just like Lehman Brothers, and it's the same name. His is spelled with 2 N's. Lehman Brothers was 1 N. But yeah, just scroll down there, and yeah, you can click on his name, Axel P. Lehman, top left. There we go. And yeah, so this is the guy, chairman of the board at Credit Suisse, has the same name as the largest bankruptcy in the 2008 financial crisis, Lehman.
It looks like it should be in a Madame Tussauds museum. That picture's pretty creepy almost.
I think that photo is a little too airbrushed.
Yeah, right.
But anyway, yeah, Credit Suisse, we'll definitely be watching that.